Welcome to Module 2, Lesson 2.3, Designing the Internal Audit and Control Framework. A comprehensive control framework establishes a culture where fraud and theft are made exceedingly difficult through specific procedures, moving beyond the simple requirements of mathematical accounting. Consider a sprawling luxury resort. Operating 24 hours a day, multiple departments process transactions simultaneously, from the front desk to the spa and room service. This environment is inherently vulnerable due to three compounding factors: widely decentralized points of sale, massive volumes of physical cash, and highly perishable inventory. Traditional centralized financial monitoring breaks down under these conditions. A single accounting office cannot watch every bartender, receiving clerk, and front desk agent at all hours. To secure this complex ecosystem, the entire financial structure must be built on a single, unyielding principle: segregation of duties. Segregation of duties dictates no single individual can control all transaction phases. If one employee orders, receives, and pays, the system is exposed to fraud. Structural separation creates a mathematical impossibility of unchecked theft, requiring three people to actively collude. Designing and implementing this multi-layered preventative framework is the primary mandate of the Director of Finance and the Chief Accountant. The first module of this framework addresses physical cash at the decentralized points of sale. The mechanism for securing these nodes at the end of every shift is the daily drop standard operating procedure. Before taking any other action, every cashier, whether at the front office or an assigned food and beverage outlet, must perfectly reconcile their personal cash float. Once the float is balanced, they are required to immediately drop all excess reconciled cash into a secure, monitored safe before they are permitted to leave the property. To eliminate the possibility of tampering at the point of deposit, the framework requires a secondary layer of security, the blind drop SOP. Under a blind drop, cash is placed into an opaque envelope, sealed, and signed across the flap. That envelope is strictly quarantined. It will only be opened and counted later by separate, independent finance or security personnel. This blind process serves a critical structural purpose. By removing cashiers from the final count, they cannot adjust declared amounts to cover up physical shortages. These sequential procedures are segregation of duties in practice. The person who collects the cash is structurally isolated from the person who verifies the cash. The framework must then expand beyond physical currency to mitigate the risks inherent in digital payments and deferred corporate accounts. Extending credit to corporate accounts or large groups introduces severe exposure. This is governed by the City Ledger SOP. Before a single dollar of credit is extended, the client must submit a formalized, signed credit application, which then requires strict executive management approval. That approval must define a hard mathematical maximum credit limit. Without this boundary set in the system before services are rendered, a disputed corporate bill could result in a total loss of revenue. For immediate digital revenue streams, the property relies on the credit card reconciliation SOP. This requires two mandatory data matches. First, the batch totals registered by the external payment gateway are verified against the internal property management system. Second, the property management system data is verified against the final general ledger. This three-point reconciliation confirms that a swiped card actually translates to settled funds. It must occur every single day, without exception. Digital ledgers are as vulnerable as cash. Authorizing credit and verifying settlements require the exact same rigid dual authorization protocols as handling a $100 bill. The final operational vulnerability lies at the loading dock and within the storage of physical assets. A commercial hotel kitchen during service is chaotic. Ingredients move rapidly, inventory depletes quickly, and waste is inevitable. To prevent fraudulent payouts in this fast-moving environment, all outgoing vendor payments are blocked by the three-way match SOP. This process requires three independent documents. The first is the purchase order, which proves that the goods were actively authorized by management. The second is the receiving report, generated at the loading dock, proving that the specific quantities ordered actually arrived on property. The third is the vendor invoice, which dictates the exact amount the hotel is being billed for. The rule is absolute. Accounts payable cannot process a payment to any vendor unless the purchase order, the receiving report, and the invoice align flawlessly. For inventory that is already resting inside the property storage facilities, the framework deploys the spot check SOP. Spot checks are physical counts that must remain completely unannounced. They specifically target highly pilferable, high-value items, premium liquor, expensive cuts of meat, and high thread count linen. To enforce segregation of duties, a department cannot audit itself. These physical counts must be conducted by non-departmental staff to verify the accuracy of the internal inventory management system records. These controls act as the essential bridge. They ensure that pristine digital records in the financial system perfectly match the messy physical reality on shelves. All of these individual controls feed into a final daily convergence point, the Night Audit SOP. The Night Audit is a comprehensive internal control review. It sweeps the entire day's operating data, specifically searching for anomalies, voids, and discrepancies. It forces the consolidation of every decentralized revenue stream, pulling the data from every point of sale across the property into a single ledger. Through strict reconciliation, the audit ensures that all finalized payments perfectly match the generated revenue before the financial day can officially close. The Night Audit functions as the final structural lock, securing the integrity of every transaction within the prior 24-hour cycle. A true systematic approach to loss prevention means ensuring that every single financial event is subjected to a mandatory dual-check process. It is the creation of an environment where theft and error are structurally blocked. Architecting this unyielding ecosystem is the defining responsibility of the Director of Finance. This rigid, transparent system removes the burden of suspicion from the daily staff, protecting the professional integrity of the employee as effectively as the capital of the hotel. True financial integrity is an architectural achievement that secures the hotel's bottom line by protecting the integrity of its employees.